What's going on, everyone? Welcome. Market's about to come out of lunchtime, so figure jump on, do some live streaming here, kind of go over the markets and see exactly, what happened today. In my opinion, I think there was some really good moves today. Really good moves today. Not only price action, I felt opened up a little bit and expanded. I think that there was an equal opportunity for a lot of traders to not only catch shorts, but also catch some longs. So depending on what type of trader you are, I think that all in all, very good moves to be had. Now, if you really think about this first opening drive trade, and we trade this a lot inside of my community, if the setup is there, right? So not every day the setup is going to be there, but some days, it's there, and when it's there, it's freaking juicy, right? So what I'm looking at typically is I'm looking at the previous swing low from pre-market going into the New York session, and I want to make sure that we have space. And in this particular case, we had plenty of space because we were trading below a lot of levels of supply. And you're going to notice here on my chart, I've got a lot of moving averages. I do have a much cleaner chart that I use to scalp. And if you guys don't know, I do trade, with various different prop firms: Apex, Day Traders, Top Step, Top One Futures. So a lot of those charts, they're very clean in terms of what's on the chart. But I do have, multiple monitors, and I use this chart that we're looking at to kind of be my gauge and kind of give me a lot of sense of direction. Now, utilizing all these moving averages can definitely be a little bit tricky and complicated for someone who's never seen it, right? There's a lot of stuff going on here. But for me, it gives me a lot of confluence in where I could put my cash, meaning where I could start these trades that have the most potential. And that's really what we're looking to do as traders, is we're looking for that potential, right? There's no one strategy. There's no one specific level. There's no one or right way to trade. So when you start looking at the overall context of the market and you start trying to figure out where do you want to take a trade, for me, it's always where could I put a trade on where I can control the risk. Now, for me, I always control risk with the amount of contracts that I'm trading, right? So that's always going to be number one. There's a lot of people who sometimes say, well, I can't take this trade because I don't want to give up 20 points, 30 points, 40 points, and I'm not saying to do that, but I'm just saying I can give up 100 points on a specific trade and trade one micro and lose $200. You can have someone else who puts on a trade with one mini, loses 10 points, and they lose $100, right? Or whatever the case may be, $200. So when you look at that, are you really managing your risk with the chart, the technical levels, or are you managing it with the size? And for me, it's always easier to just manage it with the size. Now, again, I'm not saying to sit there and trade one micro contract or one mini contract. You can do as you please, but I'm just saying, it's easier to manage it's a lot easier to manage your position size with the contracts. And then that allows you to actually use the chart to manage the trade versus managing the trade off pure dollars and P&L. And a lot of traders will manage, okay, my stop loss, I only want to lose $200, but I'm trading one mini contract. It's going to be hard to manage that $200. That's where traders tend to get stopped out and chopped up a lot, especially if there's a lot of volatility, especially if the market is consolidating. For the NASDAQ 100 specifically, going up or down 10, 15, 20, 25 points in one candle, and I trade the 5-minute candlesticks, if it's very easy for the market to do that, right? So just keep that in mind. The initial trade off the open today was pretty sweet, right? So if you kind of look at this previous swing low that we had from the pre-market, there was nothing below. And like I said, I've got a lot of supply ahead. 20-day moving average, or 20 simple moving average, to 50 simple moving average, to 200 simple moving average, right? Take my chart and just eliminate everything and just put a 20. I would do this. Put a 5 SMA, a 20 SMA, a 50 SMA, and a 200. Nothing else, right? Start off with that. Those 4 levels are going to give you great entries and great areas for targets, great areas for supply and demand, right? Remember, supply and demand is nothing more than just support and resistance. That's it. So however you want to use support and resistance, whether you want to draw on your own zones onto the chart, whether you want to use VWAP, whether you want to use Bollinger Bands, whether you want to use moving averages, EMAs, doesn't really matter. Pivot points, there's a lot of different ways that you can put on supply and demand on your chart. I just so happen to use moving averages, and those 4 moving averages to me are very, very important. Let's continue with the story. So you can see here below this 20 SMA to kind of start the open, right? We never really popped a high. We never closed over the 20 SMA. And then the market started to sink the first 5 minutes of the session. Now, trading the opening 5-minute print is extremely hard to do. I say that if you don't have a specific strategy to trade inside the first 5 minutes, just let it go, right? Just let it go altogether, because it's going to be, you're going to lose probably and get chopped out more than you're going to make money. But if you can allow the first 5-minute candle to close and then kind of build some TA around that, right? Some technical analysis around that, and you have a strategy that's going to put you into a trade, I think you can do really well for yourself, right? It's just that opening print, that FOMO kind of gets to a lot of people. So if you notice that swing low from the pre-market, first 5-minute candle closes below that. We take it out, right? And now we're below the Bollinger Band, the 5, 10, the 20, so forth and so forth, right? So all you're realistically waiting to see happen is you want to see continuation, because off the open you want momentum, right? And not every day you get momentum. There's days where the market opens up and it's choppy for the first 15 minutes, right? Where it looks like it's gonna break down, break up, it wicks in, wicks out. You know, you can't predict on any strategy when it's gonna work perfectly, right? So in order to be consistent, you have to continue to trade the same way each and every single day. Because if you don't trade the same way every single day, you're going to have inconsistent results. And when you have inconsistent results, well, that's what kind of makes your P&L very, very inconsistent. Now, again, I'm not saying that every day is going to be perfect and every day you're going to make a ton of money. It's just not going to happen, right? If you think that this is a business where you learn a particular way to trade and it's just, you know, put your feet up on the desk and everything becomes easy, it's not, you know, it's just really not. So the main thing here is, you know, capital preservation. We want to make sure we're protecting our capital. Number 2, we want to make sure we're staying consistent, staying disciplined, right? That means taking the same type of trades, using the same type of risk management, using the same type of size, right? And if, you know, as time goes on and you start to make more money, you can naturally increase your size. And a lot of people always kind of wonder, you know, when is it a good time to size up? When should I go from looking for a $100 day to a $500 day? Looking for a $500 day to a $1,000 day? And my answer is very simple. You will know, okay? You will know. When you see the P&L on the screen and you stop getting so anxious when you're in drawdown $150, $250, $350, $450, whatever the case may be, when that number on the screen becomes numb to you, naturally you will increase your size, okay? A lot of the emotions that we have is due to the size. So with that being said, you know, take a quick scalp here. Now, again, some people like to take really big trades. I've tried, I've flirted with taking really big trades before where I try to swing for a lot of points. It just doesn't work with me. It just doesn't sit well with me. And my results tend to be a lot more inconsistent. It's not to talk down on anyone who looks for 30, 40, 50 point moves, because hey, more power to you, right? But for me, you know, my sweet spot is, I'll be honest, I'm going to be completely honest. My sweet spot on any one particular trade is between 5 and 15 points, right? And it doesn't seem like a lot, but the strategies that I'm looking for, the entries that I'm looking for, every single day, I'm going to get at least 4 to 6 of them. Every single day, there's going to be 4 to 6 different entries that present themselves. Whether they all work that day, whether 80% of them work that day, I don't know, right? I don't know, but I've got to be consistent, right? And it doesn't necessarily mean that I need to take all 5 entries. You know, if I take 2 and they manage to work out in my favor, hell, I can walk away on the day, right? So first trade was here to start the day. I'm just kind of recapping the price action because right now we're really not doing anything. We are flagging, right? We have a 5-minute flag formation pattern that's setting up here. I do have support at 24,600, guys. So 24,600, I would watch this level. If we do break and close below that, and then we bounce and reject and confirm the new low, we might have an area of opportunity to short. But this is probably going to be a good spot for buyers to kind of step in here and bounce this a little bit. So I just will say, as long as we're trading over 600, it's probably a good zone where I can see some buyers coming in after lunch now and trying to bounce this up. We'll see how it plays out. So that first trade was here. Here's the opening drive. You take out the previous swing low from pre-market. You take it out. You allow that first 5-minute candle to close. And then you kind of wait for the following momentum to confirm the new low. And it was right here, 5 minutes off the open, guys. We shoot down from a low price of 24,517 all the way down to 24,473, right? I mean, that's a 30, 40 point move. And for someone who's looking for 10 points, 10, 15 points off those opening drive trades, you know, or I should say anywhere between 5 and 15 points, depending on how many contracts I'm trading, you know, that's a really good trade, right? It's a really good trade. You can make a couple $100 off the open, very, very easy. And especially if you have a 9-to-5 job or you've got some stuff to do, maybe you got to take the kids to school. I mean, that's more than enough, right? Just continue to walk away. I think with any prop firm, you know, making over $150, $100 a day is going to count as a green day for them. And, you know, you just got to keep doing that, right? So the next trade that I seen that really set up itself today was, again, you know, just kind of hanging back, waiting to see if this bounce was going to get rejected or not, and put in a new low. So obviously, if we took out the low of day, you know, that 15-minute opening range to the downside, I would have been short once again, right? That would have been something I was looking for. That did not happen. So we just wait for the next setup. For me, it's kind of just like we just sit here and we kind of wait for the next setup, right? You just kind of continue to just sit on your hands and wait for something else and wait for something else and wait for something else, right? The next setup happened here at 7:05, right? 7:05 Pacific Standard Time. We close back over the 20 SMA. And when we get over this 20 SMA, it's a pretty big size candle. It's a 53-point range candle. So the volatility was definitely juiced. We were definitely steaming this morning, right? Both short and long. Once this candle closes, you got a couple of ways to kind of analyze this, right? You're not going to jump in here with 5 mini contracts. You're just not when the volatility is this much, not when you're looking at 50-point range candles. You're just not, right? So for me, you know, keep it under 5 micros. You're going to be okay for yourself. You know, you can use different areas as a stop loss. You can use a break and close below the 20 SMA. You can use a break and close below the 5 SMA. Like I like to use to manage my trades, the 5 simple moving average. And the reason being is because, you know, it's kind of similar to people who use the 9 EMA or the 8 EMA or something like that. It hugs really, really tight to the price action, to the bodies, to the candlesticks, and it trails, right? It trails. So as long as I'm over this 5 SMA, and I'm in an active long, right? And I'm talking about the long at 7:05 Pacific Standard Time. You just hold the trade. Even if you're in drawdown, just hold the trade, right? If you close below it, you break below it, you start losing that area, you can think about getting out of the trade. It's very, very simple, right? Very, very simple. You know, what gets people confused, again, comes back to the size. If you're trading too much size and you're wicking up and down 10, 15 points, it's like got the adrenaline just absolutely pumping up, right? Like you're just the emotions, the adrenaline, you're stopping yourself out prematurely. You're taking profits prematurely, right? You're doing a lot of that because of the size on the P&L, guys. The P&L, you know, kind of dictates how you're feeling. Truthfully speaking, it's not the chart necessarily that dictates how you're feeling. It's the P&L. So just control your P&L with size. So anyways, with that being said, you know, that 20 SMA trade, again, 5 to 15 points, if I can get it, anything in between, I'm going to sell out for profits. So getting into this trade at 24,569, within 5 minutes shoots up to 584. I'm out within less than 5 minutes, guys. And although it shoots up higher, yes, I understand. Yes, why not hold it for longer? It's not my style, guys. It's not my style, you know, and it's to each his own on the way that you want to trade. And my style is, you know, getting in at a decent spot, identifying that decent spot, and then managing the risk, right? And if I can take 2, 3, 4 trades on the day and, you know, win 3, lose 1, I'm a happy camper, right? Today was really good because I did trade a mini contract today. So, you know, these trades for 10 points are close to $200, right? So, You know, first trade was about $233, give or take some change by the time I got out of it. The next trade was just shy of $200. So I mean, you know, you're doing really well for yourself. And again, you know, if you don't have like a lot of experience trading, you know, don't trade a mini contract. Maybe trade 5 micros, maybe trade 3 micros, something in that vicinity. But it is what it is, right? So now once I have this cushion, I'm starting to notice, okay, well, you know, we're pushing back up, right? We've taken out the 30-minute opening range high. We've taken out the 15-minute opening range to the long side. What's next, right? What's next? And with a lot of resistance up in this area, the best thing to do is just to stay patient and wait for some sort of back test to see where the buyers are actually going to step up. Where are they going to hold? What price are they going to hold, right? And I started to notice this first initial pullback. They held the 50 EMA and the 50 SMA, and it bounced. We pulled back again and we put in a higher low, and it also held the 50 SMA. I took my next long here, right? I looked at this candlestick here, double bottom, held the 50 SMA twice, consolidating long. If green candle takes out red, I'm in, and took this for a nice little ride here. And when I say nice ride, I'm talking 5 to 10 points. That's it, right? So took this for a nice little ride here, but you can see we're just stacking. We're stacking. Every single trade is just like a stack. It's like brick layers, right? We're putting one brick on, we're stacking another brick, we're stacking another one, we're stacking another one, right? And hopefully when we take those losses, we don't just crumble the entire foundation. We just, you know, if we're up 2 or 3 bricks, you know, and we lose a trade, well, let's just take it down a brick or 2, right? So you always want to make sure that your equity curve is nice and smooth. And for me, again, I've mentioned this before, I mentioned this a lot in my Discord community, is that, you know, I don't really manage my R to R on a trade by trade basis. I manage it on a day by day basis. So if I average, you know, let's say $250, $350 green on the day, you know, I don't want my biggest losing day to be $1,500, right? I want it to be something like $250, $350, right? Somewhere in between. And just because I know that for every losing day that I have, it's going to be about 1-2 winning days, or every losing day that I have, it's going to be 1 to 2 losing days before I'm back to flat, right? And that just kind of keeps your equity curve smooth. And you know, I'm on social media. I read comments, I read other people's YouTubes, I read articles, I read a bunch of stuff, right? And I always feel like a lot of traders, retail traders, they want their equity curve to be boom, straight up to the upside, right? Like just want it to go straight up. And the farther you go straight up, the faster it comes straight down, right? That's just my opinion. So just keep it smooth, right? Keep it smooth, nice and smooth. And guys, I said, if you're looking for the long, this is a good spot to find an entry to go long. And don't think that we're going to take out the high of day. Just a long here for a quick scalp, right? Just a quick scalp. Just see if you can get a few points off this and call it a day. Again, if we do lose 24,605. If we lose 24,605, there's no interest here in a long, right? Just get out of that damn trade because this market could fall all the way back down, truthfully speaking. We do have supply sitting at around, got supply here actually at 642, but I've also got a little bit more supply at 653. I'd like to see it get up into 650s. 650s on this bounce would be a nice little bounce. Again, big bull flag here. Just look at the last push higher, look at the pullback, right? It's not really losing any prior swing lows. It's just kind of pulling back and consolidated through lunch. And now it's kind of pushing higher. So if you're long here, if you can get some profits into the higher 40s, if not 50s, I think that's a good spot to take some profits. Again, remember, I'm a nobody, right? I'm not a financial advisor. I'm just not financial advice. This is my freaking opinion, just based on the chart that I'm looking at here. Again, anything over 655, right? Anything over 655, you can definitely go up to 670. Watch this here as the volatility is starting to get a little wacky, getting a little wacky with these wicks. Again, You know, if you're wondering, you know, why the hell is this not pushing up, guys? We've got I can give you the exact moving average here. I've got a 100 EMA, that is sitting right dead smack at 642-ish, right? So that is acting as our resistance for right now. So until we can get a candle to close over that, it's going to be pressure to the downside. Again, we do have a lot of support that's stacked 627 and at 606. So just kind of keep an eye on that, guys, and see what we want to do. What I like to do later on in the day is start to look at the hourly chart and see, you know, what the heck are we doing on the hourly chart? Because the hourly chart's going to hold a lot more weight than a 5-minute chart, than a 15-minute chart, than a 2-minute chart, 1-minute chart. And if you look at the hourly chart here, we are being pinned below the 200 EMA and a 10 simple moving average on a 1-hour chart. So this, to me, although the 5-minute and the lower time frames look good for a bounce, this to me looks like the higher time frame is going lower, because in fact we had this nice bounce, you know, 30 minutes off the open, an hour off the open. We had a fantastic bounce, a 200-point bounce, in fact, a 250-point bounce, in fact, that got rejected at the 200 SMA. So remember, if you're looking at these moving averages as significant areas of supply and demand, well, the 20, 50, and 200 are your strongest levels of supply and demand. So if we never reclaimed the strongest level, which is the 200, the market's going to do what? It's going to pull back, right? Until we take out 24,700, you can expect a lot more choppiness, consolidation, back test, right? So if you're looking to get into a trade, you know, and you want to use the higher time frames, what realistically is probably the better level to wait for? Maybe waiting for 600 to get broken. Okay, so wait for 600 to get broken, which on the 5-minute time frame definitely correlates with losing the last bit of support that we have. So again, I love using that 1-hour chart to correlate the smaller time frame moves. As of right now, yes, smaller time frame is saying stay long, right? This could be an opportunity to bounce until we close below 600. That's it. If you're looking for the short, now is not the time to short. You could have shorted all through lunch, right? Short off the highs because you have less risk up here towards the highs than you do down here at the bottom of the pullback, right? It's just, sometimes you just got to use like basic common sense and try to analyze the chart from just a realistic perspective. Like if you have a lot of major players who can move the market, would you want to short at the bottom of the range or the top of the range? It's definitely not at the bottom of the range, right? It's more towards the top of the range because you have less risk at the top of the range. Because at the top of the range, if we break that and continue higher, you get out of the trade, right? At the bottom of the range, truthfully speaking, if you're shorting right here, you got all of this that you're going to have to sit through and endure, right? So I'd rather be long at an area where we've shown that we've bounced a few times before, right? So with that being said, that, you know, that's kind of just the basic recap. Like to know how you guys are doing. How are you guys feeling today? You know, how are you guys doing today? Yep. So that's where we're at today, guys. That's where we're at. Also, guys, Apex is back with the 80% off sale, right? Who would have thought, right? It went away for one day and it's back. But today, this one, the $85 activation fees is what makes it worth it, right? So just the 80% off, yeah, it's okay if you really need some accounts, but when you can snag those $85 activation fees, that's when it's worth it. Just full transparency. Remember, with this current sale, the renewal after 30 days is 50% off. It it doesn't stay at the same price as you bought it. So just keep that in mind. But pass it in 30 days, you get a nice savings on the $85 activation fee versus spending the $130, $140, right? So that really makes up for it. I'm just saying. So here we come down, guys. We got to watch this. So now if you were long anticipating a bounce, and let's say you weren't looking for a quick scalp and you were hoping for some type of reversal, this is where you have to start getting a little bit more cautious as to holding this, because if we do start to break and close below this 50 SMA, you got to watch out, right? So again, for me, if I was sitting long in this, you know, it's pretty close to a max pain where, you know, technically I need to get out. What I could also see happen here is a sweep through this 50 SMA that comes down here maybe into like 590s, the lower 590s, and then reclaims the 50 SMA. Then that might be another opportunity for a long. For shorts, you know, again, wait for the close below 600 and then wait for a little bit of a back test and then go short. If you're an aggressive scalper, then taking something below 24,606 into this Bollinger Band at 592s, great scalp, right? Great scalp. But again, it depends, right? Like sometimes it's kind of hard to talk ideas, because some traders think, well, if it's a short, then why am I not sitting short? Like, why don't I just wait short, right? If it's a bounce, well, why is it not going up towards highs? Not every trade is going to be a trade where you're holding for 50 points. Some trades are just micro opportunities to make a quick 5, 10, 15 points, you know, make a quick scalp. There's a difference between a scalp and a difference between an actual idea to ride a trend, right? So just remember that not every idea is an idea to just take the whole damn thing all day long. This is actually turning into a great opportunity here. If someone was scalping through the bottom of this range, you know, for a good move, right? For a good move. If you look at this previous swing low here from 805, that's exactly where we're at now. So again, I would not start your short position here, especially, what is this new candle's only about a minute in here. I would wait for this candle to close and then see a back test and then a loss at this area before you go short. Unless you just took that little quick scalp, then you should be out. So just give it a few minutes here and see what this wants to do. We can also look at some higher time frames as well. 30-minute chart, absolutely. Look at the 30-minute chart, guys. So if you look at the 30-minute chart, again, rejected at the 20 and the 50 SMA. It's been pulling back for the previous hour, and we've lost the previous 30-minute candle low. We've lost the 30-minute 10 SMA. I mean, and we've lost the formation here, this body. So this definitely just looks like we sold off overnight. We had a dead cat bounce to start New York session, and this looks just like a continuation of what we were doing during London. So 1 hour chart also has lost the 5 SMA. My Bollinger Band on a 1 hour chart is sitting down here at 24,517. Bear flag is also broken too, so if anyone trades like bull and bear flags, look at this one here. Right where I drew this white line. You see that? I'll just make this bigger just for the sake of the example. Look at this white line here. So look at this test here of the 50 SMA, second test, bounce, and then now we've broken through this bear flag. If that was something you were waiting for. So you can also look to this trend line as a resistance. But, you know, I don't really need to have this on the screen just due to the fact that look at where my 50 SMA is at. It's the same thing. It's the same trend line, right? So the 50 SMA for me will be resistance. no longs until we get over the 50 SMA. In shorts, we look to see if it gets rejected in that area and or confirms this 5-minute low. Kind of waiting to see what the next 5-minute candle does here. I want to see if it confirms. We do have VWAP here though. We do have VWAP here. It's not on this screen, but we have VWAP here that we're bouncing into right here. It's kind of matching up with this Bollinger Band, so we can use that. But the VWAP is sitting at 24,587. So let's see, now that we've kind of broken through VWAP, do we continue to hold VWAP with pressure to the downside? Anything below, for me, 24,563 is worth a quick scalp. But I'll be watching that to see. Be watching to see if this turns into new resistance here. So pushing into a lot of resistance right here. Again, if you just take my chart for what it is, all of those moving averages that are sitting above us is all areas of supply, right? So although the bounce looks great, sure, if you were catching some type of reversal and you had some strategy to catch this little bounce here, great. Just FYI, you're running into a lot of resistance right here. So unless this is going to be the low of day and the market's going to continue to go higher, you got to kind of be careful here, because the market does not have to continue to go higher. It can stop at any one of these levels of resistance. So, you know, you can get a push to 610, you can get a push to 616, to 627, and it can reject at any one of those spots. So, you know, just be cautious, right? Just be cautious. One-hour chart trying to remount the 5 SMA. That's bullish. Again, we still need to wait for a little bit more clarification if the price action is going to hold. The 15-minute chart is pulling back into, you know, it looks like this flaggy type pattern here. I would need to see it get over the 20 SMA. So again, I like to kind of correlate a lot of different time frames with the idea that I want, right? So for me, if I want to go short, I've got to take out 564, right? I've got to take out 564 and then I can go short. If I want to go long, I need to see some of these higher time frames reclaim some of this supply before I can go long. Let's see what some of the news headlines say. Like, what do we got? You know, sometimes I just like reading shit, help pass time by. Read some headlines. Stock market indexes appear headed for the first joint 3-day losing streak since Liberation Day sell-off, right? Wow, big whoop, right? Big whoop. I mean, market's extremely bullish on the year. Nvidia stock can soar more than 35%, Barclays say. You know, what is that? Apple deliver Intel its next lifeline. Here's what analysts think of the deal. The Fed doesn't think inflation will run amok again. PCE price gouge will help us clue it in. Tesla sales struggling in Europe. But you know, when I read stuff like that, like, doesn't Europe have like a lot of EV companies? I know Tesla for us is like the biggest, right? But it's like, when you think about it, you know, there's a lot of people in Europe that don't really like Elon, and they do have like a lot of their own companies over there. So is that even like a big deal? Probably not. Some of the stupid articles that are on Market Watch are ridiculous. My friends visiting NYC always want to stay with me for free. Yeah, well, no shit. It's very expensive. I just got back from New York about a month ago. It is expensive out there, but they always want to stay with me for free. I think they should pay for a hotel. Who's right? That's the article title. What do you guys think? Do you have friends in NYC? Should you stay with them, or should you get your own hotel? The Fed's interest rate cuts are fueling a stock market melt up and ruin for some investors. 6 top takeaways from the past earnings season. Here we come down, guys. I'm going to continue to watch this. Continue to watch this and see if it pushes down the lows. If it does and I take a trade, win or lose, it's going to be my last trade on the day. I'm going to take it with super small size, because what I'm going to do here is I'm going to protect what the hell I've done today. Right? So today I'm up 955.28. That's the exact total. So we have a little bit to work with here. This would also be confirmation of the closure below VWAP. These are areas where I don't really want to do nothing, right? In between. I don't want to do nothing in between this low of day, and I don't want to do nothing in between these previous 2 candle highs, right? Like this inside range, there's nothing going on, right? Like the market's not going higher until it gets over 609, 610. The market's not going lower until it takes out 565. So why do anything in between, right? Like, unless you're like this crazy good, you know, super small micro range trading expert, like, just sit on your hands and be patient, right? Sit on your hands and be patient, because you can't, there's not really a whole lot to work with. Like, market can go down, market can go up, right? Like, what else is, you know, what else is new, right? So you're kind of like guessing. At least if I go short below the low, then hey, that's a valid reason for me to go short. Now I can put on a stop loss and I can try to manage that. If we reclaim the 50 SMA, okay, maybe this pullback was just a sweep of the 50 SMA, and it's going to go higher from here, and I can put a stop loss. Just telling myself, let me jump short here, let me jump long here. I'm guessing. I'm like, okay, nothing really got validated, and I'm just assuming that I'm going to be on the right side of the next move. And necessarily, even if I take a short or a long, if it does break out of this little range, doesn't even mean that it's going to be right. But at least there was a validation of a reason why I wanted to go long or short, right? And I think that's what gets a lot of traders, is like they're trying to like decipher when this is going to break down lower or break higher, instead of just waiting for the damn thing to break lower or break higher. Because you're trying to be like right? You're trying to be right, and you're trying to freaking, I don't know what you're trying to do, right? Like, we all do it too. Like, we're trying to guess right, but whatever. Let's just wait for something to happen. I'm just going to put a little bit of a trend line here just for a visual. I'm looking at 564. Inching its way down there, guys. I'm in short here. I'm just looking for a quick scalp here. Again, I can use this 5 SMA as a trailing stop, so as long as I'm below that, I can choose to stay in this until I grab some profits. Again, just remember, I'm looking for a very, very quick scalp. I'm not looking for, a 100-point move or anything. So I'm going to trail the stop with this 5 SMA. Again, this could just very well be just a sweep here, and then it could just shoot back up very, very quickly. So just keep that in mind. Try to manage it with your position size. Right now, the ATR is sitting at about 30 on a 5-minute time frame. This first initial wick, this wick crackdown below these two candles is holding a little bit. Stop loss is probably going to be over 583, 585. And now you just sit and wait, guys. That's it. You like, once you have an idea on the table, you just sit and you just wait for something to happen, right? Like, there's nothing to really do in terms of managing. I know where I want to get out of this trade. I know that I'm just looking for a quick little cash grab here. Could very well start to poke above this 585. But again, position size is managed, so even if it does stop me out here, it's not like it's the end of the world. We're not going to, get completely crushed. Now, if I was trading, 2 or 3 mini contracts, then yeah, taking a 20-point hit is definitely going to, it's going to do some damage, right? Still trading below the 5 SMA, so pressure is still down. Until we get over that, you know, I don't really have any concerns until I break over that. Once I break over this 5 SMA, then yes, I'm gonna have to get out of this trade, because I don't want to be in drawdown from 585, you know, to 600. That really wouldn't make any sense for me. But I don't like the previous 5-minute candle close. I don't like the wick down here. This wick down here kind of signifying that buyers wanted to step in a little bit. So I'm going to really manage this tightly. Like, look at how it's not taking out the previous wick. You've got this 5 SMA kind of curling. So if this does start to spike up over 575 now, I'm probably going to be getting out of this trade. So the risk on this trade is about 10 points as of now. It started off closer to 20 points of risk. Because I'm using a trailing stop in terms of using the 5 SMA to trail, it's kind of knocked that down. Yeah, it's just having some trouble here, and we're getting a little bit of a bottom wick on this candle as well. I'm not really liking this short as much. I'd like to see a little bit more momentum start to fly here. Currently in profit, only about 3 points here. It's not much, so I'm gonna really watch this trade here. There we go. There we go. Just a little bit of a pop there. There we go, guys. All right. I just got 9 points and a quarter. So 9 points and a quarter. I logged out of that trade. Takes the P&L up to $1,000, $1,004.06. That's it, guys. You know, just a quick trade there. I only traded that trade with 3 micros. Again, just because at this stage of the game, this late in the day, we're not looking to make a crazy huge trade. I'm just looking to add a little bit. You know, the idea there was if we broke this low, 564, get in short. That's what I did. We broke 564, got in short. I used the 5 SMA as a trailing stop. So just kind of use that as my gauge. Hey, as long as we stay below this, regardless if you're in profit or you're in drawdown, just kind of stay in the trade until it loses the 5 SMA, meaning it gets reclaimed, or you take profits. And that's how I kind of play a lot of my trades. That's how I manage a lot of them, is just by doing that. What's up, Haley? How you doing today? How you doing? So I mean, again, not bad, right, guys? It's down about 5 point or 10 points from entry. So if you're looking for that quick 5 to 10 point scalp, you know, that's it. And that's kind of all I'm doing all day, is just looking for those 5 to 10 to 15 point scalps all day. And there's about 15 points or 10 points now. So, and there's a little bit more, right? So 15 points total. Again, and that's the move, right? Like, so my strategies, my way of scalping, it doesn't get any more interesting than that. Like, that's all it is. Like, I'll look at these levels, I'll use the 5 SMA as a trail, I will get into the trade, and I'll just sit in it until I get stopped out, or I get my 5 to 15 points, anything in between. And then I just kind of wait for the next setup, and I just kind of keep doing that over and over and over and over and over. And hey, you know, some days I stop out for green, and some days, you know, I finish red, but I just try to keep things as consistent as possible. You know, that's all you really want to do. But with that being said, guys, I said, you know, that was my last trade. I really don't have any interest in continuing to trade later on in the day. This is way past my trade window. Anyways, just wanted to stop on and see how everyone was doing and kind of give my daily update on some of the trades and some of the ideas that I did look to play today. If you guys missed any of that, you can go back to the beginning of this as soon as the live stream is over. Give me a thumbs up on the live stream, guys. Also, again, 80% off on those Apex evaluations using my discount code DEEANTHONY. Again, the $85 activation fee is really, really sweet. Guys, if we do, keep this in mind, because I'm going to log off here. If we put in a nice long wick here and this candle closes over the 5 SMA, you might be able to put on about 20-25 points worth of risk and try to target back up towards 600s. Okay, and if you do that, you know, take profits on the way into 590, on the way into 600, it might be a decent little trade. But hope you guys all stay safe. Again, guys, be patient. If you don't love the trade, don't take the trade. Control your risk with the number of contracts you're trading, not with, you know, how many points you want to give up or how many dollars you want to give up. If you want to give up $100 and you want a 50-point stop loss, then you're going to be trading 1 micro, right? If you want to give up $100 and you want to trade 2 micros, and hey, you're probably going to be giving up 25, 35 points or something like that, right? So control your risk with the number of contracts that you're trading. And again, sit patient, wait for your setup, and when you get them, execute on them. I will